Ever felt overwhelmed by all the Capitaland REITs in Singapore's market? Today, I'm going to sort through the noise and give you a crystal clear roadmap for choosing the right Capitaland REIT right here as a local investor. Whether you're managing your CPF, building out a passive income with SRS, or weighing risk and growth, this breakdown will finally answer your toughest questions. By the way, if you're new here, I'm Iggy, the investing iguana, ranked 8th in 2024 Influential Tigers by Tiger Brokers. The channel just crossed 1 million reads and 58,000 likes. I've dropped over 1,000 videos and clocked more than 600,000 watch hours as of August 2025. I'm also on the ground tracking both Singapore and global investing trends. Today's deep dive is adapted straight from my latest Substack analysis. Here's our roadmap for this video. First, we'll introduce the Capitaland REIT family in Singapore. Then, we'll check sponsor commitment, break down the debt risks, dig into income growth, and size up actual valuations. We'll see who's really walking the walk with insider support, who's winning on diversification, and where the best dividends are hiding. At each section, I'll give you a character moment or a real-life scenario to anchor the insight. And I'll close with my Singapore-flavored verdict and actionable moves you can use starting now. Let's get going. Imagine you're a Singaporean investor scrolling your brokerage app at night, maybe with a Kopi song beside you. 4 Capitaland names stare back: Ascendas, Ascott Trust, India Trust, and Integrated Commercial. Which one truly fits your style and needs? Is bigger better? Is global safer? This is where most investors hit a wall. Let's start with the landscape. Capitaland offers Ascendas REIT, industrial and logistics assets spread between SG, Australia, UK, and the US. Ascott Trust, global serviced residences, heavy Asia-Pacific flavor. India Trust, largely Indian tech parks and developments. Integrated Commercial Trust, prime malls and office towers in the Lion City. Each REIT brings a different flavor, kind of like choosing between Kopi, Tea, or Milo for your morning jolt. They aren't all interchangeable, and understanding the twist behind each one is your key to investing smarter. Now, sponsor commitment. Consider this. If the boss puts their own money in, odds are better they'll run the business with real hustle. In your brokerage app, look at related party shareholding. Here's what it boils down to. Ascendas REIT holds around 20% sponsor ownership. Ascott Trust boasts over 40%. India Trust near 38%. CICT at almost 30%. So, Ascott and India Trust are the real skin-in-the-game picks. Imagine you run a hawker stall. Will your assistant work harder if they split the profits, or just get a flat salary? The same logic applies here. Quick recap. Are you noticing a difference in REITs just by how committed the sponsor is? Let's talk diversification. Think about investing as packing your HDB fridge. It's better with more variety to survive any dry spell. Ascendas REIT is diversified across Singapore, Australia, the UK, and the US, with tons of tenants and no single asset making up more than 8%. The others tilt toward geographical or asset concentration, with CICT focused on Singapore alone. If you want recession-proof payloads, Ascendas is your best fridge, stacked for overseas risk spreading. Yet, CICT is the fallback for anyone laser-focused on Singapore growth and stability. Here's the quick mental image. Picture a 4-compartment fridge. Ascendas loads up all 4. Ascott and India Trust spread out. CICT packs 1 perfectly. See the table in the Substack for the full spread and caption. Next question. Would you rather own a Singapore-only fridge or one with global snacks? Debt profile. Who's most exposed if interest rates spike? A rate hike can torch yield faster than a durian price surge in peak season. Ascendas and CICT both keep leverage below 41% and have over 80% fixed-rate loans at manageable costs of around 3.2%. Ascott Trust enjoys lower average debt costs near 2.6%. India Trust pays up to 6.5% on loans, thanks to India's higher inflation and rupee risk, with less cushion against shocks. So, if MAS turns hawkish, India Trust is first in the firing line. Ascendas, Ascott, and CICT should weather storms better. Visual cue. Imagine a 4-player mahjong table. Ascendas and CICT play cautiously. Ascott saves on interest. India Trust bets with higher rates. Full numbers? Jump to Substack. Rhetorical. How much rate risk can you stomach before your dividends feel the squeeze? Distribution per unit. DPU. Your passive income's lifeblood. Let's look at what each REIT really pays you. Ascendas sits atop with a quarterly payout upwards of 15.8 cents, growing 3% annually. Ascott Trust has turbocharged its DPU growth after COVID at 6.3 cents, up 8.6% last year. India Trust is a solid mid-weight, and CICT, while stable, has flat growth for now. Quarterly or semi-annual? Ascendas pays often. Ascott and India Trust pay twice a year. CICT is the dependable but slow payer. For visuals, picture 4 bowls for your income. Ascendas fills up fastest and steadily. For nitty-gritty numbers, catch the corresponding DPU chart on my Substack. Mid-video plug. Don't miss the full tables, breakdowns, and charts. Jump to Substack and see the whole playbook for members. Question: is a rising payout more important to you, or do you want a stable, predictable income even in choppy waters? Here's what matters for value: dividend yield and price to NAV. Ascendas hovers near book value, P/NAV 0.96 with a 5.6% yield. Ascott Trust and India Trust both trade at bigger discounts with fatter yields beyond 6%. CICT is also at a discount, offering around 6%. Visual call-out. Picture 4 price tags in Fair Price Supermarket. India Trust's tag matches its item. Ascott and CICT offer sales. Ascendas is priced like a trusted premium. For all price ranges, breakdowns, grab the Substack tables. Question: when shopping for REITs, do you go straight for the sale items or pick the trusted brands for consistency? Let's tally the scores with my Iguana ranking. Who tops the charts when we blend alignment, diversification, debt, income, and value? Ascott Trust wins the all-rounder title. Ascendas is the best global grower. India Trust shines for high yield, but beware volatility. CICT feels like a homegrown classic, solid but not sizzling. Lesson: don't just follow size and price. See how each REIT fits your investing goals, CPF plan, or risk appetite. Personal take: over my 1,000 videos and years of investing, I've learned that a balanced portfolio isn't built by copying one expert. It's built by knowing your own needs and matching the REIT profile to your risk tolerance and financial horizon. Ascott Trust looks best for growth and recovery. Ascendas for steady diversification, especially for CPF/SRS. India Trust for those who crave yield with extra spice. CICT for true blue Singapore stability. Singapore challenge: don't just buy blind. Set a quarterly calendar alert. Review, rebalance, and remember, your needs change with every phase. One REIT won't rule them all. We covered sponsor commitment, risk and diversification, income, valuation, and practical first steps. Remember the fridge, the hawker stall, and the mahjong table when you build your portfolio. If you want every table, checklist, and the full written playbook, hit the Substack link, available for all members and serious dividend hunters. If this helped, smash the like and subscribe. Drop a comment with your REIT questions or tell me what's in your fridge. Join the Iguana community and check out my next video, how to use CPF to optimize Singapore REITs in 2025. See you next round. Invest smart and stay curious.